Good afternoon. It's Saturday, June 10th, 2017. I'm doing this in the afternoon. What I'm going to do is take a look at the markets using HGSI Investor. HGSI Investor gives us a unique perspective on the market because it is one of the few programs out there, maybe the only one, which allows us to create our own indexes out of any group of stocks. Now I'm going to be using a couple of folders here. I'm in my W&B user groups, Major Markets Plus and Broad Market Indices. These are the two folders that I'll be using. Now for those of you who are members of the Insider Club, these groups were updated today. I updated all of the institutional indexes primarily, so everything's up to date. Anyway, let's get started. I'm going to go to the Major Markets Plus. I'll click through to my warehouse view. I am in my top-down process views. Right now I'm looking at the number one view, which is top-down analysis, VPA scorecard, trends, combo. And you can see that the trends which are the strongest are at the top of the list. Now, there has been a lot of talk about the Hindenburg with the small cap indexes. Notice though that in HGSI, using the VPA best fit trend indicators, that both the Russell 2000 and the S&P 600 small cap are up. Now also the SOX, which really got creamed yesterday, it is up in all three phases also. But let's start with the Russell 2000. Now I'll just go to a base chart. I'll go to my top-down charts, and actually, let's see what I want to use here. I'll use Ian's multiple indicator chart. Not all of the indicators are going to calculate on these small cap indexes because the small cap indexes don't have volume, but we can still see what's going on. So there's no force indexes because both of those formulas require volume. Also, there's no volume down here in the volume windows. Still, you can see that as I zoom out, I'll go to my alternate 2 keys. You can see that this index, the Russell 2000, has been strong over the past couple of weeks, actually, or let's say a week and a half. Here's a big move up here after a hammer, pulled back, and now it, if I put a crosshair on here, you can see that it is right near. It actually closed higher here than it did back here, so it's closing at a new record high. Let's just check this out with the weekly. You can see it with the weekly. All you have to do is hit your alternate W key, and it shows that the Russell 2000's at an all-time high. Yes, I realize indexes can be deceiving, and there was a lot of fear that these two small cap indexes were showing that there was not a lot of activity in them to the positive side, and that they would be rolling over soon. I just don't see that. It looks like the S&P 600 is out to a new high also. Now I need to go in and edit this Windows view, and I'm sorry I said this, the small caps don't have volumes. The S&P 600 does. I'm going to go in and I'm going to disengage this clip volume on spikes greater than 10 times, and now you get a feel for the real volume. Look at the volume that has come into the S&P 600 during this rally. Volume off of after the election, well actually that's February. Here is the election right here. We're on a weekly chart, and look at that volume. That's how active this market has been. I'm going to go back to a daily chart by clicking on the alternate D, and you can see that the S&P 600 is out. Just, it looks like it closed right at a new high, slightly higher than over here, and volume has been really steady. So I do not see a lot of disintegration, I guess is the correct word, in the S&P indexes. Let's take a look at the NASDAQ, which yesterday was hit hard. You can see the big volume spike down here. The force indexes both turned negative. Let's go to a different chart here. Go to the NASDAQ chart. Get this out of the way. Get the crosshairs out of the way. It opened at an all-time high yesterday, and look where it closed. It dropped considerably. It was down, if you look down here, 1.8% by the end of the day, and the volume was extremely heavy. Now, as far as the internals, if I hit my alternate I key and open this window, you can see the internals, and there were actually 1,218 advancing stocks yesterday and 1,125 declining stocks. So even though the tech leaders got hit really hard, it's showing that the advancing issues versus declining issues was positive yesterday. There were 188 new highs and 20 new lows. Lots of selling pressure, though, based upon volume, because the ARMS index was clear up at 1.51. 1 is neutral. This is at 1.5 times that. You can see the percentage volume to the 20, the 50, and the 90 was extremely heavy yesterday. So, yes, there was some selling, but the internals were not that bad. Now, going to the Dow Jones Industrial Average, I'll just continue to use this chart even though this is NASDAQ information. You can see that it closed at a new high yesterday. Now actually let's go to down here to chart number 3, and this is the Dow. You can see there was an effort to rise, a couple of pocket pivots the past couple of days. The trends are all up. I do not see a breakdown in the Dow either. This blue line up here represents the volume point of control, or the VPOC 1010, and you can see that the Dow has remained above that. It was below it on this day, and above it looks like about 8 or 9 days ago. So it's been positive, and it was not affected yesterday by the sell-off. So let's get out of here, and I'm going to move down. I'll go to the designer, and I'm going to move down to these broad market indexes. Now, these are all indexes that are created. It looks like I need to go ahead and rebuild these. So I updated some indexes this morning, and I didn't run an update after that or rebuild them, so that's why I had to go in and rebuild them. And now you can see that they've all been filled in. I'm still in my top-down view here, but I'm going to move down to the number 2 view, and the combo is the demand combo, but I'm going to move over here to the advancing issues versus the declining issues, and this gives me a very strong feel for where the strength and weakness was yesterday. And if you look up here at the top, you'll see that the energy index was 5.21 to 1 advancers over decliners, followed by financials. Banks were strong yesterday, and then power shares, dividend achievers. The Dow was 23 positive, 7 decliners. Industrials, here's that small cap 600, 407 to 165. And the S&P 1500 was 2.14 to 1. S&P 100 2.09 to 1. So you can see that even though yesterday was a disaster for some of the tech stocks, that generally the advancing issues versus declining issues were positive. We can go all the way from number 1 down to, I'll make this full screen, down to number 28, and anything from here and above was positive. Now this is where the problem was yesterday. Everybody's been chasing the same stocks, and it came back to haunt a lot of traders who didn't get out, or if they didn't get out, they were stopped out if they had stops in at very unfavorable levels. But you can see the NASDAQ 100 is only 0.27 or 23 advancers to 84 decliners. The technology sector, 74 advancers, 370 decliners, and the SOX, which was a disaster, 0 advancers and 30 decliners. Notice that as you look over here, these trends are still strongly up. One day does not change the trend on either the technology or the semiconductors. Rather than looking at the SOX and the NASDAQ 100, I'm going to focus on the technology index since the stocks that are in the other indexes, the NASDAQ 100 and the SOX, are many of them are in the technology index. So what I'm going to do is I'm going to change I'm going to change my mind. I'm just going to go up here to the top to the industries and sectors and go to the sectors. I'll grab the technology folder and I will just drag it down to my user groups. I'll go ahead and generate this index. So what it's doing, it's building an index from the technology stocks, and it's the same index which is showing up in the broad market indices, but I want an index contained within this folder. So the index has been built. I'm just going to type in index and locate it. Here's the technology index. Let's take a look at it. And I'm going to go to my HGSI index charts, and let's just go through a couple of these, and you can see what has happened with the technology index. You can see that the A's have rolled over, and they are coming down, and the E's are starting to move up. Now these two lines represent A and B accumulation and D and E, and they are also starting to roll over. And it didn't happen yesterday. It started happening a few days ago. You can see that the red had turned up. That represents D and E, and B and A had started down, and the market was still going up. Now this is what happened yesterday. You can see that they continued both up and down, or they continued coming together. And look at that extreme volume. There was a lot of fear yesterday, but there were some buyers too. How do I know that? Just looking at this VPA signal here called transfer of ownership, which means that the volume is extremely heavy, and buyers stepped in to purchase some of these stocks. Now I know the expectation is that for these tech stocks, many people, many traders are thinking that this is just another one-day blip. That remains to be seen. Yesterday was pretty fearful for some of these stocks. Let's just move on down to the next view. This is just another accumulation. It just shows a breakdown of what's going on. You can see the outflow of the A's is really going into the B's and the C's and the D's and the E's. I'm going to move down. This is the percentage of stocks above their 20-day moving average, 30-day moving average, 50-day moving average, and 200. Now, there's no fear down here yet. These have not broken down, but you can see that several stocks dipped down below their 20-day and their 30-day moving averages yesterday. This is what I call my potential buy-sell signals. This is something I did several years ago when Ian and I were putting the workshops on in Palos Verdes, California. You can see if it's a dark red here, that means that it's a 5-to-1 negative day, decliners over advancers. This is at least a 5-to-1. I should say these are at least 5-to-1 negative days. Advancers, 2 decliners, and declining volume over advancing volume. Both force indexes turned negative. The VPOC went from positive to negative, and that generated a red bar here, which is a potential sell signal. I don't come right out and say it's an outright sell signal, but all of these components of the index are telling me that it's time to really beware. Now, I'm using an 18, a 50, 100, and 200 moving average fan. You can see it's been extremely bullish with a lot of institutional support. Came down to the 18 and it moved back up and it's holding the 18. Now, like I said, we don't know if this is a one-day blip or the beginning of something or not, but the trends remain up and volume was extremely heavy. I'm just going to do one more of these, and this shows what happened yesterday as far as the technology sector. 16% were advancers and 80% were decliners, and here's the actual numbers that I pointed out before. ARMS index on this was clear up at 6.14, which indicates extremely heavy selling on volume. And you can see that there's a negative pocket pivot here. Now let's break this index down in a little more detail. So I'm going to go back to my technology folder. I'll just click through on it, and I'm going to, what I'm looking for is my filters over here. I'm going to go in and I'm going to select group index equals no. I want to get rid of that index and just have stocks in here. What we're going to do is we're going to look at the spectrum analyzer. This is intraday one-day change. This shows the percentage that we're up compared to the percentage that we're down. And this was intraday stocks trading over $1, trading 100,000 shares. And what I'm going to do is I'll just go ahead and create a couple of indexes here under my primary technology folder. I'll prepend this so it's going to put a date on. I'll call this advancers versus decliners. Say OK. And it's going to take a few seconds to build this. Okay, those are built. And if I click on my technology index, this is the complete group, and here are the advancers versus decliners. Actually, I didn't, I wanted to put that under here. So what I'm going to do is I'm going to go to this folder. I close the warehouse, and I'm going to drag this down by holding my shift key and my left mouse button, and I'm moving the advancing versus declining folders down underneath the technology index, which was my original intent. I just wasn't paying attention. So I'm first of all going to look at the stocks in the technology sector that were up for the day. So I want to once again go back to that group index equals no, and that's going to let every stock pass. There are no filters limiting stock to price or volume, and you can see that yesterday 122 were positive for the day. And if I click on my spectrum analyzer and drop down, or move up to, I should say, the industry groups, this shows me where the out of these 122 securities, where the strength was and where the weakness was. And you can see that there are 15 groups, if you look down here, that were affected. Now, some of the application software was up, some of the communications equipment was up, and so on. But let's compare this to those that were down. And you can see that there are 440. And now you can see that the majority of the application software, semiconductor devices, and so on were down. I'm going to flip back to those up for the day. You can see that there are only 6 semiconductor devices that were up, 33 stocks in the application software group. But once again, if I compare this to the downside, it's overwhelmingly negative, with 108 on the application software down and 69 semiconductor stocks down. The problem with yesterday was that so many of these stocks that have been leading this market were hit the hardest as fear took over. I'm going to go down to my wolf packs here, end of day. This is folder number 11. These are stock wolf packs, or stocks that are in groups. And I want to go to the second one, stock wolf packs down one day. I'll go to stock wolf pack stocks down in the down wolf packs, and I'll click on the raw combo. And this combo happens to sort the industry percentage price change one day to the negative side, and you can see that other hardware was down 4.38%, followed by semiconductor devices minus 4.74%, and so on down the list. Semiconductor manufacturing 3.69%. So you can see that there was a lot of damage done on a percentage basis. Now I'm going to move down the list to a folder that I have, and I call these momentum scans, and this is strictly on a combo, fastest moving stocks up or down. It says intraday momentum combo, but this works just as well end of day. And looking at this with this combo, this is some of the damage that was done on these stocks yesterday. You can see some big percentage breakdowns here. Let's just go through a few of these stocks. I'll flip to a different chart. I'll just go up here to my most used daily charts, and I'll just go with a pretty simple chart. Now, this is a stock, Azure Software, ASUR, that has a fan in place. It's been in a strong uptrend, and you can see that a few days ago that this stock started losing momentum. There were several VPA flags, and then yesterday there was an effort to fall on heavy volume. The VPOC went from positive to negative. You're going to see a lot of stocks that look like this. Here's HubSpot. This thing looked great. Yesterday it opened at a new high, and look at it, VPA flag, reached new high on higher volume but failed to hold. That's a negative signal. Look at the points that were wiped off of this. It wiped out over a week's worth of gains, if for those who are still holding it. 5.9, this one looked like it was setting up to go higher. In fact, it tried to go higher, break out yesterday, and it failed on heavy volume. Just a lot of fear in these tech stocks yesterday. A lot of ugly charts. Let's see, what was this one? Brooks Automation, I was in that. I sold it yesterday when it failed to hold the high. I'm not going to name all these stocks, but you can see that a tremendous amount of damage was done. Now, Citrix had failed and had broken down. It looked like it wanted to rally, but that was wiped out yesterday. Let's look for some names here. As NVIDIA was the leader of the market. This stock had moved up 4 standard deviations, which is extremely beyond a normal move, and you have to expect a correction. It gapped open, and I assume this was short covering. It moved up to a new high, and then it wiped all that out. It did manage to hold above the 18, and there were some buyers that came in at the end of the day. This really is the de facto leader of the market as far as I'm concerned. Ultra Clean Holdings. This was a really nice stock. Look at this. And it, too, was hit hard. Here's KLA, Tencor, Kemet, Light. Light had been moving up sharply. Look at all these VPA flags. Here's a negative flag, but that was counteracted by positive, positive, positive. Looked like it was going to go, went to a new high, got hit. So I don't have to go on and on. There were a lot of stocks that were hit hard. Here's one more stock which has been a leader, AAOI. It was showing some signs of weakness, and here is a pseudo upthrust, and then it was holding, opened at a new high, not a new high, a higher high than the prior day, and sold off hard on heavy volume. Just one example after another. So where do we go from here? Well, there was undoubtedly a lot of damage done, but as I pointed out earlier, the small caps are actually strong. The Dow's strong. The S&P actually bounced back yesterday off its lows. The markets in general still look pretty good, but with that kind of damage that we saw on Friday, it makes the psychological aspect of buying some of these stocks and running them right back up a little bit harder. Why do I say that? Well, let's just let me go back to NVIDIA. It's probably a really good example. Buyers did come in. It came back to the gap, held right at the gap, but all of these people up here that purchased or covered their shorts, it's got to work its way back through there to get up to a new high, and there's going to be plenty of sellers above the market. So you really need to be careful. What happened yesterday, unfortunately, and let's go to the canaries. There's probably these are probably some of the best examples under the W&B user groups. These are stocks that we've followed for a long time. Here is Alphabet Class A. You can see buyers came in to support it, but this was over $1,000, and it dropped down, closed around 971. It looks like Amazon had a major shakeout, and it traded all the way down to Friday's low was 927. It closed at 978. So all of these stops were run. There was a lot of money given back. Stops are both a blessing and a curse. If your stops are positioned correctly, and if you can get stopped out before the free fall hit, the damage may not be too severe. But if you get caught up in this free fall, you have no idea where you're going to get filled. Some people got filled down here, and they're pretty sick about it because this bounced all the way back to 978. But the problem with not using stops is you look at a chart like this and you say, well, geez, if I hadn't taken the stop, I'd still be in here around 978. The problem is we don't know what's going to happen on Monday and next week, and every time you don't take a stop, it seems, or I should say I don't take a stop, it seems like the stocks continue to go down and the pain just increases and you sell at worse levels. So both a blessing and a curse, like I said. I wanted to go this way. Here's Apple. You can see that some buyers came in at the end of the day. Apple iPhone 8 is coming out. I guess there are great expectations for it, but institutions were dumping yesterday. Facebook got hit. All the leaders got hit. Microsoft got hit. Netflix took a pretty good hit. Priceline. Tesla. Now Tesla is just gone crazy for a company that, it's really on the come. It isn't from current earnings, it's expectations. And clearly a fan formation moved up. These stocks, some of these stocks kind of remind me of 2000. I mean, who's the last man or woman on? We don't know. And anyway, as far as Monday goes, I'd be very careful about jumping right back into these tech stocks. Let them settle down. Let's see what they're going to do. Fear may take over. They may continue to go down, and there's no question that they have been overbought. So there may be other opportunities to get in here, to buy some of these stocks, but I'm going to be very cautious. going into Monday. I'm sorry, going into money too. That's it. Hope you enjoyed this look at the market through HGSI.